What is going on, everybody? This is Crypto Ed here. It's good to see all of you guys here for another session, another masterclass session. Today is going to be an exciting day because we have quite a lot to cover. If you've been in the crypto space, you may be aware that today marked the public offering for Coinbase, which is a pretty big deal if you're in the crypto space because we all know that Coinbase has always been viewed as one of the on-ramping options for many people in the crypto space, and just seeing them getting onto crypto really legitimizes the whole idea of using crypto as an investment vehicle. Because for the longest time, a lot of people have been saying that crypto is funky money, it's funny money. I don't believe it. You even have people like Warren Buffett calling it rat poison square. And today, just seeing that Coinbase being listed on NASDAQ really proves that there's a lot of legitimacy coming in. And some of you may have been following it too. If you look at Coin NASDAQ, you look up Coin NASDAQ, you may be able to see how they're we want to be curious to see how they're doing, right? Coin NASDAQ, right? You can see the prices too, how they opened at about $424 and it dropped a lot, and now they picked up a bit of a recovery back above 300. And I'm not surprised at what just happened because I should be aware that with Coinbase there were a lot of early investors, and these are not just these unknown investors. These are investors such as endowment funds for universities. So you have a tech investors, endowment funds, a lot of big funds that they got in on this. They got in for something like 14-15 cents per share, and now they if you got in at 14 cents and now it's worth $300, you have every reason to dump it out. And that's just what happened today. And it dumped massively. And of course, people bought the dip, right? A lot of people bought the dip, and we'll see where it goes from here on. I mean, there is a lot of hopes for this space because this is crypto. This is new. A lot of people are excited about what's happening, and they want to get in on this. So before we you can see as people start flowing in, feel free to unmute yourself. I'm trying to see. Yeah, I think Robert just finishing up his slides right now, but feel free to unmute yourself and let's do a quick maybe round of introduction. As we are a very tight group, so I think it's always a good idea for us to get to know one another and maybe even share about maybe if you have if you made a move this week or we took a position, feel free to share. I think it's always great to. I think that investing shouldn't be something you do by yourself, but it should be something you do as a community. And as a community here, I think it's always a good idea for us to learn from one another and feel and see and experience that investing can be a community effort. So feel free to unmute yourself or even just share in a comment on any position you took. So anybody?
My name is Fernando. I haven't taken any positions yet in the cryptocurrency stocks, so I'm just trying to learn about the cryptocurrency stock. I usually go into the regular stock market. I have a couple of, not a couple of shares. I have shares in Fiverr, Upwork, Facebook, and it was one more I just got, Roblox. So. Yeah, I'm the only ones I'm really into. So, but I'm looking forward to learning more about this cryptocurrency day trading.
Yeah. Let's go. Thanks, Fernando. Yeah. I think you'll enjoy this. I think you'll discover a lot, learn a lot, and also in the process, right, make a lot in the crypto space, because this is like one of those like once in a generation, once in a lifetime type of thing, right?
Right. Yep.
Like 100 years ago, like people invested in oil, they became very rich, right? And then and 100 years before that, right, people were investing in the spice trade, right? They're investing in tea, spice, and like trades from I guess from Europe. Europeans were investing in Asia and development of North and South America, right? How they were spice trade and everything, and they became rich. And this right now we have the opportunity to get in on the most life changing, like society changing thing is crypto. I do believe that there's while a lot of people get in crypto for fast gains, but there's a lot of fundamental like benefits for crypto. How crypto it is on a mission to help the billion people on this earth that is not banked right now. I mean, a lot of us, we're fortunate that we have a bank we can go to, but there are people in countries where there's a civil war, there's like a poor government system, and they don't have a bank account. And even if they want to set it up, the bank will ask them for the IDs, and they don't have it because they left it behind when they had to run away from the home, right? And a lot of these people, they may have like some assets, right? Maybe they have like family assets and something, but the banks will not recognize it. And I do believe that crypto will change everything.
Yeah.
All right. So anybody else want to introduce themselves? Let's be.
Hi, Ed. Hi, everyone. My name is Julia, and I am very fresh, very new in crypto. I'm really interested in Bitcoin and Ethereum, but most of my interest in Bitcoin because the price going up so fast, like skyrocket. And I just first purchased a Bitcoin like 2 months ago.
Yep.
And then I say because I'm very new, so I don't like nobody guides me. So I kind of like, oh, I'm lost. I don't know when should I buy? I know like people buy high, sell high, and we shouldn't buy low and sell high. But when I look at the price go up and down, so I don't know when. So that's why I joined to this class, so I can know like more reading the chart, so I can understand better.
Okay. Yeah, I think being aware is probably a good first step. Dipping your toes in the water, that's a good first step to be familiar, because becoming like investing is it is a lifelong journey. It takes time to become good at it. Like Robert used to always like to say that you probably need about like, if you want to be good, you should put in about like 10,000 hours into this, right? And like picking up 10,000 hours is not easy, but you can pick it up in small bits right here and there. I know when I first started, I didn't know anything, but I know that I had time. Like whenever I go to work, I have about like 45 minutes on a bus, right? So what do? I just pick up my phone. I listen to like some educational like videos, right? I watch some YouTubers, I watch some experts. I look at how they chart, and over time you become good at it. And in the crypto space, same thing, right? Just putting in the time to understand like what is the blockchain, right? Or what is the distributed ledger? Because there are a lot of these like they're sort of technical, but they're not like overly technical. Like these are like more the fundamental, the basics about crypto and blockchain. And it's always a good idea to understand what you're getting into before throwing your money in, because a lot of times, especially I've been around the crypto space for a while, right? And back in 2017, I know that people were throwing the money into like projects that they have no idea what it is, just because like someone told them, hey, you should buy Ripple, or you should buy BitConnect, you should buy BitPetite, right? Like the people heard Bitcoin, they thought they missed the boat, and then then all of a sudden someone comes up and throws them like a name that starts with the word bit, right? And they think it's like the next Bitcoin. And the sad reality is the crypto space is not regulated, it is unregulated, meaning there are a lot of fake projects out there. Like you go on websites like CoinGecko or CoinMarketCap.
Yeah.
Right? You go and then you see all these projects, and the sad reality is 98% of these projects right now, there's about like 900 projects, 9,000 projects out there, 9,000 cryptos. The sad reality is 98% of them will be gone in 5 years, either gone or they'll lose like 98% of the value. And I've seen that. I've invested in a number of them. A lot of them, like they started going downhill, and then like you lose like everything you put in. And it's important to put in some time to understand like what they are about. And sometimes a good place to start is, for example, with Cardano. You may have heard the name, right? Sometimes it's always a good idea to click on white paper and read the white paper, right? Like some white papers are pretty short. Like for Bitcoin, the white paper is only 8 pages long, so it doesn't take long to read it. Like you can probably read it in half an afternoon, right? With a drink, you can probably read it and understand that okay, Bitcoin is out there because they don't want to have one central database where it could get hacked, but instead they want to have like hundreds, if not thousands, of like databases, right, where they can verify transactions. So you learn about like, oh, this is what distributed ledger is. This is what a blockchain is, and then eventually like you can pick up as you piece together like different understanding. You can move into more advanced topics, right? Topics like decentralized finance and such, where like just at the last Zoom meeting, right? This is the general meeting. Someone was sharing about how he had some Bitcoin. This is not financial advice. I'm just sharing what people are doing, right? I know some people, they had like about like 1 or 2 Bitcoin. They would put it up to like a DeFi project, like a decentralized finance loan broker, and they'll take out a loan against a Bitcoin. And during the whole time, the Bitcoin will continue to grow in value, right? And they'll take out a loan and use that loan and invest in another coin. So now they actually double their investments, right? And of course, it works out if they both go up, right? If they both go up, instead of just making how much Bitcoin is making, they're making like they still technically on paper own that Bitcoin, but it is like you can say it's like mortgage out, right, or whatever, right? And if that loan they invest in something else, so they'll make like if Bitcoin goes up 10%, make 10% here, and then they bought maybe like Cardano ADA, which goes up 50%, right? And so that's how they double their investing potentials. And of course, you also could lose like a lot more too, right? I mean, this whole concept is not new. I mean, like we see this in the fiat world too. Like people, they'll take out like a loan against the house. They take out like a HELOC, home equity line of credit, or maybe they take out like a life insurance line of credit, and then they take that money and invest it in elsewhere. While the home still goes up in value, they have something else to invest in. So yeah, I mean, like, there are a lot of great vehicles out there, and like understanding the basics first is important, and also understanding the fundamentals of each project you go in is important too, because the last thing you want is to invest in a project where you have no idea what it is. And even if it's volatile, like if you understand the big picture, right? If you understand, for example, Ethereum, right? For example, Ethereum, right? You may not understand, like maybe like you don't understand like the intrinsic or like you don't understand like the details of like how like an Ethereum smart contract works, but if you understand more of a general picture of what is a smart contract, how they're being used, how you have different apps being built on, how it is like the internet 3.0, right? And then if you know a bit of, let's say, charting, right, you can look at the trends and such, right? By meaning looking at trend, meaning you know to zoom out and you look at how it has been growing over time, you would see that okay, generally like it goes up in cycles, it goes up, right, and then comes down, and then eventually comes back up again, and it gives you some understanding, a small picture of what it could be like in the future. Of course, past results is not indicative of future outcomes, but you know that things move in cycles. And even if you let's go to Bitcoin, right? This is not investing advice, but imagine if you bought Bitcoin at the worst time. Let's say you're like the worst trader ever. You bought Bitcoin at the worst time. Right. Let's say you bought Bitcoin here. I have all these ads showing up, but you bought Bitcoin here. You bought Bitcoin here. You thought, okay, buy the dip, right? Oh, buy the dip. You buy the dip, right? And it keeps dipping, right? Right. You bought Bitcoin here. It keeps dipping, and then you buy again here, right? You bought at all these worst points, but when you zoom out, you're better off. But it's just some observation I noticed, but I can see that Robert is here now, so we could get started soon. But I'm just gonna read what the chat comments are saying. So we have Lori who said haven't purchased any crypto yet. You're not too late because 99% of the world hasn't bought crypto yet, and there's a saying that if you look at I'm just going to open up a calculator app, right? Right now there's about like 7 billion people on this earth, right? There's 7 billion people on this earth, right? 7 billion, 1 2 3 4 5 6 7 8 9, right? And Bitcoin has only there's only like 21 billion Bitcoin, 21 million Bitcoin. 21 million Bitcoin, right? If you were to share it with the 7 billion people on Earth, in order to, like, if you were to distribute all 21 million Bitcoins with everyone on Earth, everyone gets only 0.003%. And if you don't have 0.003, or you have more than 0.003%, you're better off than the world average. And there's also another indicator that, let's say, if there's like 21 million Bitcoin and you share it amongst, let's say, you share it amongst let's look at how many millionaires there are in this world. Right, you look at how many millionaires, right? There are about like 46.8 millionaires on Earth right now. So if every millionaires were to get like some Bitcoin, how much would each millionaire be holding? Right. Let's make this easy and call this 50 million people, right? If you own 0.42 of a Bitcoin, like just less than half a Bitcoin, right? You will have more Bitcoin than what a millionaire would own eventually. Because eventually every millionaire on the earth will want to have a Bitcoin, especially when you have all this money printing, all this unreliability of fiat currency. Eventually millionaires will want Bitcoin, and there's not going to be enough to go around when you have 50 millionaires trying to fight for 21 million Bitcoin. At most they can only get is like 0.42 Bitcoin. And if you have more than that, consider yourself luckier than a millionaire eventually. So yeah, so it's never too late for that. And then I can see that Ahmed said about any thoughts about trading leverage token, BTC up and BTC down on Binance. This is just my personal opinion. I've talked to a few people. I know some people, they do buy leverage token like BTC down, like as an insurance policy. Like if they feel that they've made a lot and they think that Bitcoin is showing signs of crashing, they may buy like a 1%. They may buy like a couple like BTC down as an insurance policy, right? And just like insurance, when you pay for insurance, you don't get a refund, right? You spend it, right? But if the incident happens, right, you get a big payday. The same way that if Bitcoin does tank, right, and you have like a BTC down, you can consider that as like cashing out your insurance policy. But if it doesn't, I mean, like it's that extra feeling of comfort knowing that if it tanks, at least you'll cover. Because a lot of people, right, back in 2017, right, they bought Bitcoin here, went up, rode it all the way to the top and all the way to the bottom. If only they got like an insurance plan, right? A BTC down, right? Just to cover the assets. Like, even if it drops this much, at least they're able to protect like 20, 30, 40% of their positions. But this is just my opinion based on the people I spoke to. Of course, you can also profit like if there's a big crash, right? But you do need to know how to chart, and this is why this is why I'm excited to have Robert here to talk about it. And then yeah. Okay, so I think Robert's here. Robert, are you ready to share? I can give you the intro. So I can see Robert's here, so we can probably get the show going. So it's our speaker for today is Robert Paddock. He's been day trading for over 27 years. Back in the days, before you had computerized trading, you had to look at newspaper. Robert was doing that since the age of 12, and when he was 21, he won. He got first place for the world trading competition, and since then he has been like trading. He's been teaching people about how to day trade, how to read charts, how to look at different signs, and he even predicted the 2008 market crash. He was warning people 2 years before that, and he even warned a lot of people in the crypto space back in 2017 that 2018 would be a bad year. Of course, most people didn't listen to him, and they suffer. But I'm really excited to have him share about his insights on the crypto space. And as I introduce him, I'm also will be setting up a poll for everyone in this group so that you can, so that we can see what is everybody's favorite coin. So without much ado, I'm going to invite Robert Paddock to the stage. So Robert, the stage is yours.
Awesome. Thanks, Ed, for the intro. If you could make me co-host, that would be great. And I'm going to give a ton of value today, as usual. We're going to have you guys improve getting to the next level. Before I get started, though, I just want to say, how is everyone doing? I appreciate you all being here today. I do know it's beautiful weather we're having on the West Coast here. But definitely you're going to get value here. Every minute counts. So I want to ask you guys, before we get going, what do you guys think? Type in the chat. How many % of people do you think are actually in crypto now? We saw Ed showing if 0. whatever % had crypto, what would be the prices potentially? What do you think? What is the number of % of people around the world that have cryptocurrency right now versus don't have any cryptocurrency, haven't even purchased their first coin? What do you think? And another number, 5%. I like that number. I would guess 5% have it. I remember 3 years ago with Ed, we were telling people at seminars confidently that we're the first 1% talking about it. And even a year later, first 1 or 2%. And I don't want to be over optimistic, so maybe it's 3%. Now, right? If you look at the entire population of the planet. Now, if you look at the westernized countries, the ones that have more internet connection right now, although that's changing because in a couple of years, basically they're pushing to have everyone on the planet connected to Wi-Fi. $300 billion just in the United States alone being spent on infrastructure in the immediate future in getting internet connections in rural areas of the United States. And there's a lot of programs and companies working now to get even connected all of Africa to Wi-Fi. So, but even just the countries that have right now connection to internet, what % of those countries and populations do you think have crypto? I would still think it's close to maybe the 5 to 10%, probably on the lower end of around the 5% mark. Okay, so we know that we are still the early adopters. And maybe I can pull up a picture here. Let me see. So it's very important to know this because a lot of people are not learning this yet. They're missing out. So we can see here which coins would we like to cover. Okay, let me take a picture of this because I will be covering those. Okay, cool. So that's great. And type in the chat any coins you want to cover tonight also. Anything that interests you, I'm going to write down those coins. That was going to be the next thing we were going to do. Bitcoin is guaranteed, as is Ethereum. Okay, hot. So type in the chat any cryptos that you are maybe looking at or brand new. There are a lot of altcoins. So if there is something that interests you or got your attention, please feel free to type it in the chat, and then I will try to pull that up also by the end of the meeting. But yeah, going back to the indication of how much do we have people in crypto versus not in crypto, I can confidently say we are still the early adopters, right? So if you look up any chart like this, we can see here that we have the first 2.5% are considered the innovators, not even the early adopters yet. Okay, so congratulations for being here tonight, because you will be rewarded for that very fact alone. You can see even 13.5% is sometimes considered, I guess this is in anything, but maybe in companies. This is probably corporate and stocks, but still it works the same for crypto or in any other industry. It looks like 2.5 plus 13.5. So basically the first 16% are still considered early adopters. You want to get involved before the early majority. Bless you. So basically what we have here is, you can see you do not want to be the late majority, and you definitely don't want to be a laggard. Okay. That's, by the way, of these categories, type in the chat, which one do you think it will be when they start teaching about cryptocurrency in public schools, in elementary schools? Because do you think we'll still be doing that while we're in the early adopter stage in terms of how many people are using crypto, or are we going to be more closer to this one here, or somewhere in between? Because typically by the time you find out about everyone learning about it in public education, chances are by then all the low-hanging fruit will be taken off the tree already. So typically I would imagine that would be the laggards, right? So definitely there's still plenty of room for growth, and that's good news, regardless of which particular crypto you're in, regardless of which type of style of trading or investing or hodling you're involved in. So why do I bring this up? Because when we're talking about actual trading of buying and selling different coins for one another, we need to understand which phase we are in. This is part of the reason why Ed did actually bring up at the beginning what percent are actually holding it right now, to show that yes, the potential is future is massive for the growth of crypto. We just exceeded the entire stock market of Brazil, and now or all the money even there, and compared to the size of Bitcoin, and now this is going to continue growing. It's already in the top 10 largest assets, and it'll continue getting bigger. If it gets 10 times bigger, it'll be bigger than gold, actual physical tangible gold. So at every stage, you have to treat it a little bit differently. You have to realize that trading is different here as it is here, as it is here. You need to understand what phase are we in terms of the adoption cycle. This is not an issue that we have with something like gold, which has been money for thousands and 3,000 years, basically. People were already exchanging gold coins. So that's not necessarily, you may consider that a laggard. At the same time, a lot of people are not holding it. Even with gold, there's less than 5% holding it. It used to be back in the 80s, you go into your financial advisor and automatically they would say, let's put 10% of your money into physical gold. And now let's have a discussion about you and your risk tolerance and what else we can buy with the other 90% of your money. Well, we don't have that. It's actually around 3% also in terms of the population that's holding physical gold. So in that sense, if you're doing it as an investment with the larger significant portion of your portfolio, or even having any gold in your portfolio, you're still considered an early adopter in that sense. So I talk a lot about physical tangible gold, but that's all I'm going to say about it today. Today, we're talking about digital currencies, okay, and the future of money. So understand that as this grows, you're going to see different styles of trading. Okay. And I'll give you an example when I talk about Dogecoin. What do I mean by that? Okay. Because Doge is at, I think, a different part of the cycle compared to other more established cryptos that have been around longer. Dogecoin is growing in popularity and is catching up, but it's sort of like a even earlier stage. Okay, so we need to trade certain things differently than other coins in later stages. Okay, so but that's that. So we do have a whole bunch of coins here. Again, type in the chat any coins you do want me to cover today. Otherwise, I'm going to go over basically the top 20 main ones, as well as in terms of market cap, as well as anything else that we can see. Let me see here. Ethereum, .uni, LTC, Dogecoin, XRP, Tron, VET. Okay, so that's good. And let's see here. Only as high school teacher, only investing math classes. Yeah, so I remember in high school, this is actually quite funny. I didn't do very well. Okay. By the way, just so you guys know, why is Doge thing? Yeah, we'll cover that. Yeah, I'll really cover Dogecoin for you guys today. But yes, like in high school, there were, I did very well in grade 8, a little bit less in grade 9, a little bit less in grade 10, until I realized that what they're teaching isn't really applicable to everyday use. So by grade 10, they had 4 levels of math, depending if you're like calculus, really advanced, just above average, or what we call the dumb people, they class for mathematics. Okay, so and I asked, does it matter which one you attend? That will it be reflected on your report card? They said no. So I said, okay, well, I'll go to the dumber class for math, because if I can get higher marks, it'll be reflected for potentially if I did want to go to university. Now, just so you guys know, I did not go to university. Okay, so everything I learned is from doing, not from reading from a book. Hands-on approach. And I have a lot of battle scars from the trenches. Definitely trying all of these different approaches to investing and methods and strategies, and actually they're proven and tried, tested, and I have the track record to back that up. I see this clay looks new. I've never seen that one. Okay, but it is in the top 20, and then maybe Atom. We'll throw that one in. So yeah, so let's continue on here. So long story short, I was in the dumb math class, and there was just one day that they taught something that I found extremely useful, and that lesson was compound interest. And one day, one class only out of the entire curriculum of grade 10. So what would happen if I was sick that day, or I missed class that day, or I just skipped class that day, like I started doing? You would miss out on the lesson of compound interest, which is by, Albert Einstein, the eighth wonder of the world, because it literally is a ticket to freedom if you learn how to have your time back. Okay, wealth is measured in time, not in money. So, this is something that is important that people need to not overlook. But you know what? Even in high school, they made it too complicated. The formulas made it confusing more than it needs to be. Then understanding basically, if you grow at the same rate, it'll give you bigger and bigger profits. So, that's not giving a good hint for students learning to not exchange their time for money when they're just learning that, just continue coming to class, putting your hand up when you can speak, when you can go to the washroom, go to get a job after, pay your taxes. And they don't teach, tax minimizing strategies. They don't teach you how to make your money grow for you, so you don't have to work hard for money. So, but let's move on here. So I did end up winning a math contest, by the way. So even though I was in the dumb math class, I did take a math contest that the top group had to take, and I came top 4% in Canada in that math competition. Lo and behold, all the teachers were shocked. So, if you find something of use, then definitely you want to expand on it. And this whole screen we have here is definitely something that is a good investment of your time to delve into, to learn, to do research, and find out about which one or few coins will be the ultimate ones where you want to be parked in. So before we go any further, I got to say I'm not a licensed financial advisor. Neither is anyone else on this call making themselves out to be giving any investment advice or selling any securities. strictly education. We're teaching, we're trying to empower people, give them back control of their own finances, not having to trust strangers with their money because they can now do it on their own, be confident in their decision-making abilities, and get consistent results. So with that being said, okay, I've written down a few coins here, and Doge for sure is going to be touched on. So let's continue on here. I see one more here I missed. Okay, XTZ. Got it. Okay, so we've got a whole bunch of coins here, and helium. So if Ed, you can also mention to me if there's anything I missed, then I can also cover that. Well, I'm going to go through a whole bunch of charts. Before I do that, though, so we realized that only 5% of people are paying attention to these cryptos. Okay, so now I have another question. Of those 5%, okay, what percent would you say are actually, if we've got a pie here, and we're saying that only maybe 5% are participating currently in the crypto space. Okay. Now, what happens if we take this from over here and we make another pie? Okay. What percent of that shaded area would you say that are in cryptocurrencies are actually on a regular basis trading crypto versus hodling crypto? Okay. What percent would you think are actually on a regular basis, could mean whatever that means to you, on a daily basis or on a weekly basis? One transaction per month at least. Okay. Maybe even a couple transactions per month. How many people do you think are actually trading? So of this 5%, maybe another, we're thinking, 7%, 30%, 10%, okay, 20, 80% hodling. So I agree with those numbers. And I would say they're about the same thing. So I haven't looked up the actual number because I don't think it's possible. But I believe, let's just say...
Yeah, you can...
Yeah. So Ed,
you can look it up through chain analysis.
Yeah, you can. What do you think is the number? We have a high number here, 60%. So it should be definitely 60%. But I don't think most people are trading on a regular basis. I think they may be more hodling or holding it for the long term to go up only. Another way I could frame the question is this. What percent of the people who are trading, what percent of the people that actually have crypto, which is 5% of the population, are actually making money when crypto prices go down? So you're actually trading because you have crypto and you're profiting from it actually going up and down. That is the real definition of a trader. You're profiting in both directions. Most people don't even know about short selling. They're just buying, hoping the price increases and eventually it'll go up, and a lot higher in the long term. That's not what I'm talking about trading. Buying and selling because you see that the price may go back down and you're on the sidelines for a while. And then there's also actually participating in profiting when the price goes down and you lose money if it goes up. So you're taking on the position to the downside. So not many people, we're seeing less than 1% of that 5%. So I would agree that, let's just say, it could be 25, 20, 10. Let's just say 5% of the 5%. That's just until someone can prove otherwise. That's what I'm going to say for now. Okay. So look at this. You got 95% of people don't have crypto. The 5 that are smart already, which include all of the people here today, then what you have is, they're at least learning how to onboard. They're learning how to hodl. That's good. You have your crypto. Next step to elevate to the next level is to learn how to actually be in this 5% over here of crypto holders, because this is all crypto holders represented over here, that are actually not making money in both directions. Only 5% of 5%. Okay, so if we actually pull out quickly a calculator, let me see here. Let's say we have 1 million people. Okay, 5% is 50,000 actually have crypto. Of that 50,000, another 5%. That means there's only 2,500 out of 1 million that are actually trading right now. Okay, that's not a lot. 2,500 people out of that's not even a percent. That's 0.25% of people are actually trading crypto. Now, I got one quick question. What percent of people do you think should be trading crypto? Okay. What percent of the population, with all the knowledge that we have up until today, with all the news that Ed's provided, with all of the securities challenges and lawsuits that we know, and regulatory environment and IMF statements and central bank statements, what percent would you guess? 100%. Okay. Definitely it's worth the time for 70 to 80 to 100% of people to be investing some time, at least a little bit of time, learning about, you know, what is actual money. Percent of people hodling and how long they've been hodling. Okay, so Ed's actually given us this beautiful indication here. So I'm going to pull that up. So you can see here, Huddle Waves. Bitcoin Huddle Wave. So you can see, you know, it's quite interesting. We have this black line going up here. We have these decreasing.
Black line is the price of Bitcoin.
Ah,
yeah. So the key thing is you want to look at the colors. So anything that is yellow, anything under yellow is 1 year of hodling, or less than 1 year. So anyone who's above yellow, they have been hodling for like over a year. The top is 10 years, and then you have 7 years, 5 years, and then the bottom you have orange, right? That's around like 1 month of hodling.
I see. So we're talking now the shortest time frame.
Yeah.
So we're locking now the very bottom. Wow.
Okay, 24 hours. Yeah, like less than 1%.
Okay,
That's
so Ed, that means you know how we often say that we teach people how to be the top 1% of the top 1% of traders. If you look on the background here. Well, for cryptocurrency, that's for traditional markets. For cryptocurrency, you're literally the top 1% of crypto enthusiasts, simply if you do trade at all. Doesn't matter how good or bad you are. You could have lost 90% of your money. You're still the top 1% of crypto traders. Because I do believe that those that are trading are at a massive advantage compared to people that are strictly hodling, especially in a technology-based currency when technology is evolving and changing and you know, speeding up. And you know, I saw today a video of a police dog that's a robot on New York City streets. So, you know, things change. And if you're just basically holding something, that means in the long term it'll eventually go up. You're risking becoming an obsolete whatever position you're holding. So you need to be learning, just for that very fact that in not just trading, but in anything in life, those that adapt are the ones that are going to get ahead. You could be a billionaire today and lose it all within 10 years if you strictly don't change what you have your money in, because what you have your money in might be worthless in 10 years. So you need to learn how to adapt, switching from one resource to another. So everything moves in cycles, like Ed said, and you need to learn that they don't always move at the same time, right? So you're going to find periods of time, we'll use a green circle here, that, you know, this one may be going up now, so is this one. Okay, so both of them would have profited. However, this one is going up now while this one is dropping. So why would you want to, I'll just say get in here and get out here when you're basically breaking even, right? You could be learning to pick the green circles, okay, and get into a position and get out of a position based on shuffling your money back and forth from one, whatever this is, asset. This could be Bitcoin and Ethereum. This could be gold and silver. This could be stocks and options. This could be bonds or cash in the bank or anything in between. So just by simply shuffling around, that by default tells you you're going to catch, let's put some nice arrows, this up move and avoid this down arrow. Why hold on during that time period? If I'm going to show you today how you today will be able to learn how to identify when those down arrows will occur and strictly avoid holding on during this time period. Okay. And if there's both of them falling at the same time, then you can be on the sidelines completely. And then there's the beautiful part. Okay. Watch this. We had mentioned that we can learn as traders how to easily learn to profit in both directions. What does that mean? Whether it's going down or up or down or up, you're profiting potentially if you know what you're doing. So that's what we're going to teach you today. That makes all 100% of the time now possible to learn how to profit. You're also going to be able to then trade the one product even, okay? And as it moves up and down, you're still going to be able to learn how to make money if it goes up, how to make money if it goes down. So you're profiting up, down, up, down, up, down, and no matter what happens, you're able to make money, make money, make money, make money, make money. Try to be more accurate than incorrect. And guess what? This individual who bought over here, they're basically only slightly higher. But if I add up all of these profits, going up, I made profit. Going down, I made profit. Guess what? You stack that on top of one another and it goes off the chart. You're going in a straight line higher. So you can afford to have setbacks and you're still way, way better off. So congratulations for just being on this call today about trading crypto. You are the top 1%. I'm going to look into those numbers, maybe even the top 1% of crypto traders, even if you know zero about it, but you learned one thing today. You will be the top 1% of the top 1% of crypto traders. So that's definitely an early adopter. I do congratulate you for being here. So without further ado, let's jump right into it. Let's get into some serious talk about how to actually, make money, because we can see one other thing, the trend is going which direction? Down. Okay, so what does that tell you? People are less and less and less holding forever, moving down to the next level. From that level, it's also shrinking. Less and less and less people are holding for 5 years instead of for 10 years. Why? Because they're probably moving on to holding only for 3 years and making a move because they're becoming more confident and they're learning. My job today is to get you to guess which level. Okay? Doesn't matter which level you're at, no matter how long, assuming everyone here has like one coin and that's it. They've made one purchase of crypto ever, okay? Whichever time period you've been holding on for, okay? Up here we can see the scale. 10 years, you got 7 to 10 years, 5 to 7 years, 3 to 5 years, 2 to 3 years, 1 to 2 years, 6 months to 12 months. Figure out where you fall in, okay? Be honest. Just don't tell anyone. Just think for yourself which category you're in. What's the shortest period of time that you have held a position for, and also the longest period of time you have held a position for, okay? And what I'm trying to do today is bring you down 1 or 2 levels from where you are, okay? In fact, I'm going to be talking about the 24-hour period. Making money in minutes and hours, not decades, years, and months, and weeks. We're talking about hours, minutes, even seconds. We're going to talk about making money today. So what that does is it enables me to be sure that regardless of where you're at on this scale, I will be able to speed you up to make quicker moves, quicker transactions, going from left to right, right to left, up and down, down to up, and shuffling your money from one asset to another, whichever one makes more logical sense because it has a higher probability setup. What do I mean by setup? Well, we got to look at the analysis. So when it comes to analyzing stocks, there's different ways to do it. Analyzing Forex, different ways to do it. Analyzing crypto, different ways to do it. The good news is they're all similar. Okay, so when we're looking at analysis, there are basically 4 main types of analysis. Okay, so what we can see here is these are 4 categories of analyzing something. If you are now, number 1, you have crypto versus don't have crypto. Number 2, you want to be in the 5%, soon to be 10% of the population of crypto holders that will become traders. As we can see, it's lowering and lowering the amount of time that people hold on to any position. And then when you're learning more, chances are you're participating in, a lot of the news. That's a lot of the stuff that Ed and I cover. We talk a lot about the news updates, the fundamentals. Okay, so that's the reasons behind the move. So major political or bank updates. Okay, so geopolitics, news, the sentiment surrounding the news, that does make up a big portion of the analysis on when to buy and when to sell a coin, if you now know that you can profit in both the upward and downward direction. Okay, so we're going to finish off today and we're going to actually throw in this technical part. Okay, so technical does not mean like the technology side of the crypto. We're talking about technical analysis. So technical charting, looking at indicators and patterns, because people are patterns and therefore markets are patterns. And I've seen which patterns replicate and repeat, and history does repeat. And we can identify best opportunities to get in, make educated guesses, when are the best times, and we can learn that skill. Okay, it's not something that is complicated. You need someone to show you who's been trading. I have been trading for a very long time. I'm not going to do a whole introduction on myself today. A lot of you guys know who I am, but just for a quick update, I'm going to show you. I actually have been invited to do a stock trading competition. This is actually closed already. It's a free competition. Registration is closed. But basically, next week I'll be competing for 7 days to be among the top day traders on the planet. Okay, thousands of the top traders in the world are competing for a prize of trading with real capital here. So I actually do have a team over here, and they've actually included me on here because I've traded every style of trading. I've traded stocks, options, commodities, futures, options, Forex, and crypto. These particular day traders, they're not keen on trading crypto. They actually deleted it when I wrote crypto for some reason. So you can see the old-fashioned traditional traders, they're needing to learn how to adapt to trade cryptos, or they're going to get left out trading just the same stuff they've always been trading. I've been trading cryptos for 5 years now. And 5 years ago, the charts were not the same as they are today. I was watching, there was low volume on the charts. It was not possible to learn how to identify those same patterns from traditional markets in the cryptocurrency charts. That took about a year after Bitcoin futures commenced trading in December 2017 before the charts really started to behave similarly like traditional markets. And then we were teaching that, yes, you have a massive advantage learning how to trade basically even stocks or anything to become a better crypto trader. So I do have this basically a lot of experience here. Yes, I have a Facebook group with 130,000 people that are learning stock trading. And I, again, see even here, I had to mention learn technical, fundamental, geopolitical, and sentimental analysis, because a lot of traders don't even do that. They'll with just one type of analysis and they're shortchanging themselves. I believe they're trading blindfolded if they don't use indicators. Some traders just look at price action. I say learn everything as much as possible. Always be learning 1% better every day, and you too can become an expert trader. So, that being said, this is a learnable skill. So what we're going to do here is, let me show you let's see here. So we have the different coins, and what I'm going to do now is I wrote down the list of them. Let me quickly check the chat here. So what we have is we're going to teach you now to replicate the success. We're going to teach you how to repeat the success and make your wins far outweigh your losses. So we're not talking about portfolio management today. We're going to do that next time. Okay. So what I'm talking about is when it comes to actually trading, use cases, fundamentals. Yes. Use case is fundamentals, white papers. That's like in stocks, it's PE ratio. In Forex, it's like the economic calendar. Definitely that's important. And definitely use case is important as fundamentals, because that use case could become less important, obsolete, or replaced by another coin that's faster, stronger, better, newer. Just like nobody uses Netscape Navigator anymore for Internet Explorer or Mozilla or Firefox or Chrome. So what would you say when it comes to actual trading, the technical analysis, what percent would you guys say in the chat constitutes having a good mindset? What percent of trading is mindset? What percent of trading is portfolio management? And what percent would you say is analysis? What do you guys think? There's three. You need to have all three. So what do you think is the most important one? And what do you think is the least important one when it comes to being a successful trader? Okay, 80, 10, 10, 33 each. I like those answers. Mindset 80%. Mindset 80%. So we have overwhelming 80% for mindset. Okay, so wonderful. So I'm actually going to say this. So we actually have 70% that I believe is for mindset, based on my 27 years experience trading. Okay, and I also believe that it's about 20% portfolio management, which leaves only 10% for analysis, and which also means that no matter what your analysis is, good, bad, ugly, or in between, you can actually trump your analysis by having proper portfolio and risk management. This is also known as money management. Okay, regardless of what you buy or sell, doesn't matter. If you properly structure when you're going to get in, your entries, and when you're going to get out, there's also your risk reward ratio, like making $3 every time you lose $1. So today, I'm not going to talk about so much the mindset. I'm not going to talk so much about the portfolio management, but do know that they exist and they are 90% of trading. And I will cover those next time for you guys, okay? Included in some, we'll do a technical analysis charting 101 class in 2 weeks, okay? And I'll cover those included with proper mindset, proper portfolio management, as well as the analysis. So today, I'm going to look at the analysis and what percent mindset is discipline. Okay, so you want to be able to not just win, you don't want to profit from a trade. You want to learn how to consistently profit. It's not the same thing. Okay, you can have a strategy that you hit the jackpot, you fluke out, you lucked out. But can you luck out again tomorrow and the next day and all over again next week with a different coin? Can you consistently make money? And having the mindset to know when to cut your losses and walk away rather than chasing, rather than, okay, this is what I mean by mindset. who can relate? Okay. Type a 1 in the chat if you know anyone that's ever done this. They buy something hoping it goes up, okay, so that they can profit. And what it happens? It drops. Okay. Now, who's ever heard of anyone say this? Well, I'll just hold on to it until I can break even, and then I'll sell. Has anyone ever heard anyone say that before? Type a 1 if that's a common thing you've heard. Okay. And then what happens? It goes even lower. Okay. So mindset is knowing that you're going to place a stop loss where you can be sleeping and the trade will automatically exit you out of that position right there. So your maximum loss is this much. Okay. You avoid this unnecessary loss. And usually people will call me up and they'll say, Robert, what do I do now? Usually I have the same answer. I'll say, you should have listened to me, which was learn trading, learn how to have proper mindset and discipline to not change your stop loss, not to move it lower, to get out consistently with a small loss. And now, if you had done that and you didn't change your mind after you were in the trade, you could go ahead and buy it now and actually profit when it goes from here to here and get out. It would still be lower than where you started, but you made all this profit compared to this tiny loss. That's what I'm talking about, making $3 for every $1 of gain, for $1 of loss for $3 of gain. So the mindset is the emotions of trading, and your job is to learn how to trade not emotionally. Your job is to learn how to be a robot. Your job is to learn how to avoid this whole situation altogether. And how you do that is basically, you can see, you can avoid all this trouble if you learn one simple thing, which I'll show you right now. Okay, let's say you have something, it's going up and down, and you want to decide, okay, I will buy it right now. Okay, so you need to understand that you need to have an entry price target. You also need to have two, not one, but two exit price targets. One is, if you are correct, where will you get out? Would that be a good target to exit? Not really, because the price hasn't really reached that level. Where did the price reach? This level. So this would be a more logical price target, more realistic, that we can hit that and not reverse back down like it did before, because markets like to repeat. So don't do something that's unrealistic in terms of having a target. So having the proper target to the upside, as well as having the proper target to the downside in case you're wrong. Because going back to the school example, who's ever heard of someone having a teacher call you up to the front of the class, please work out the problem on the chalkboard, because that's how old-fashioned they are, and say, you don't even know how to do the problem yet because you're just learning how to do them. But you don't want to screw up because your whole class is watching and they'll point and laugh and make fun of you if you don't know how to do it correctly. So what do you learn in school is actually not applicable to trading mindset, because it's the opposite of what you should be doing. You learn in school, don't make a mistake, don't make a mistake, don't make a mistake, because they'll laugh at me. So people go into trading with the wrong mindset, thinking, don't make a mistake, don't make a mistake, don't make a mistake. Let's just buy it. It goes up and then it drops and then they don't know what to do. Rather than going in with the mindset that you will make mistakes, because every single trader on the planet makes mistakes, including Warren Buffett, including myself. So now, instead of thinking we can never screw up like the chalkboard, we are now coming in, okay, we're going to make a mistake. What happens when it goes down? We're not going to hold it all the way down. We're going to have a stop loss. We're going to cut our loss quickly when, not if, we have a mistake. Most people, they'll just put all their money in, which is already a mistake with portfolio management. And then instead of trading smaller position sizes, then they will have the wrong mindset of not having, a stop loss that they strictly stick to with discipline, with a trading plan, with a written trading plan on paper that they will not change their mind once they have entered the trade. You need to determine where you will get in and where you will get out, and where you will get out, depending if the trade is correct or wrong. It's easier to decide where your exit prices are for both the good and the bad scenario before entering a trade, not after. Because humans will be more emotional decision makers after they've already hauled on to something and it's already started to move. So, trade like a robot, try to make your decision, where will I get in, where will I get out, ×2, before I even get in. What that's going to enable you to do is also figure out where you can get in at a better price. For example, we did a entry over here with the blue dot. Maybe instead I'll do this. Okay, so maybe what I'll do is I'll say, instead of getting in right away, right now, randomly at any given moment for anything, maybe I'll try to pinpoint a better opportunity down here. And how that's going to work is I'm going to identify this peak over here. And I'm going to identify this bottom over here. The highest the price has been and the lowest the price has been. And all I'm going to do is I'm going to draw a resistance line over here and a support line over here. And I'll throw in a third one halfway, which is the middle line, the magic line I call, or the magnetic line. I want you to think of an elastic band. If you pull the elastic band too far one way, it'll snap back to the middle. If you pull the elastic the other way too much, what will it do? It'll snap back to the middle. So how many times was the price at the very top? Once. How many times was the price at the bottom? Once or twice. How many times was the price in the middle? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times. So where is it more likely to go? The path of least resistance. When you learn how to draw these resistance and supports, it's basically as simple as that. You usually want to see 2 times that the price touches before you establish that that is the resistance line. A minimum of 2 peaks or 2 bottoms. Okay, so the price is moving twice. Okay, so what we can see now is that we're at the middle right now. So why would we buy now if the price can move up just as much as it can go down? We can profit $1 or lose $1. That's not a smart investment. Remember our rule for portfolio management? It was make $3 or $4 for every $1 of potential loss. So does that work with our example down here where we said, let's wait till the price comes down first? It needs to fall first. So we're hoping it drops so that we can then buy it. It's better to do the hoping before you enter the trade, before your money's on the table, before you have skin in the game, than just buying it. Now you're locked in, the money's on the table, you can start losing money. Because what happens if the price doesn't drop? Did we lose anything? No, we simply didn't enter the trade. It's better to miss out on an opportunity than to experience a loss. Remember, we're going to have a lot of these cycles for a lot of different coins. And we're going to be able to identify opportunities always of something that's about to go up when something else is going down. So we are now able to be more picky. And what we can do is say, if the price dropped, let's say it did now drop, we now purchase it. And guess what? We actually have here a profit of potential going all the way to the top here, whereas the loss potential is now much smaller. We can lose a little bit before we can expect the price to bounce and go back towards where? Towards the middle. So that's just a quick example of portfolio management. Mindset is having rules, sticking to them, having a written trading plan. It definitely helps to have a coach or a mentor that can show you their tricks and strategies and tips and tools and resources and mindset, so that you can avoid a lot of the mistakes. Because I've made every single mistake you can possibly think of, and I wish I had someone that had shown me them. I could have avoided unnecessary losses. For example, even this scenario will not work 100% of the time that the price will remain in this channel. It's only about 75-80% of the time. So what happens if the price does fall out of this channel and drop all the way down? Well, we could have had a stop loss right here. So we would have avoided this whole loss down here. We would have still had a much smaller potential loss than the potential payout is still much bigger. So what that does, let's say you're going to be wrong and you're going to lose this much. Let's say you're wrong a second trade, you lose this much. Let's say you're wrong a third time, fourth time, fifth time, sixth time, seventh times, eighth times, and ninth time. But on the 10th time, our trade makes this much profit. If you combine all of the losses, they will not even add up, okay, to be bigger than our actual trade that actually made money. We were only right 10% of the time. Are we making profit though? So do not confuse being accurate with being profitable. Those are two entirely different things. Okay, we can see here, we've still doubled our profit. It actually eliminated all of the losses we've had have been wiped out. Okay, and then some. So we canceled out all the losses on a single trade, and we still have all this profit that we're sitting on with 10% accuracy. So by learning how to make $3 or $4 for losing one, this is why it is more important having the proper portfolio management than it is the actual analysis of what you're buying, if it's going to go up or if it's going to go down, or which direction you're going to profit, or even just learning to profit in both directions is already a huge thing compared to just trading something to go up only. Okay, you may be wondering, Robert, how do I make money if something goes down, right? So real quickly, if you're going to buy something and it goes up, you make money. If it drops, you lose money, right? So what do you do now? This is called buying low, selling high, right? What we are going to do now, though, is we're going to, instead of buy, we're going to sell first. Okay, we're selling first. And then we're going to buy later, hopefully lower. Okay, so we're actually profiting if the price goes down. We lose money if the price goes up. Okay, so let me ask you a question. Are we still buying low? It's a green circle. We're still buying low and selling high. Just like we did earlier. We were buying low and we were selling high. Both times we sold high. Both times we bought low. The only difference is we did it in the reverse order. Okay. Here we bought first and we sold second. Here we're selling first and then we're buying second. But Robert, how can you sell something you don't own? Real quickly, basically how that works is, let's say, you're over here and you've got your handy little, let's say, laptop. Okay, you're going to place a trade to your broker. Your broker is where you have your trading account. Okay, so you actually fund that trading account with your bank. And then once you're ready, you just pull the money back out into your bank where it came from. Okay, so it takes maybe a business day or two to fund your trading account with the broker. And now what happens is every time you say buy something, you tell your broker to buy something, they're going to take that transaction and send it to the market. This could be a crypto market, a stock market, a forex market, or also known as an exchange. Okay, like a stock exchange. You have a but in crypto exchanges, it's actually the same thing. Okay, where people can both buy and sell. Okay, so here is where the transaction happens. You're going to meet with another person who is actually wanting to sell on their laptop the same coin you're trying to buy. So they send that transaction to their broker where they open the trading account and they're hoping to make profit when the price goes down. So broker will send that transaction to the exchange and they're going to try to pair up a buyer and a seller to make the transaction occur. Okay. Now, this is very liquid. This is very doable. Why? For a number of reasons. Basically, the exchange will always have lots of buyers, lots of sellers. If you go on how we did CoinGecko, we looked at the top 20 coins. They have the most activity, most volume. It's easier to pair up buyers and sellers. And another thing is, what will typically happen is your broker may already have some coins that they possess. So what they will do is they will simply lend you their coin temporarily as a loan, thus allowing you to send a sell transaction order that they will then send to the market and sell on your behalf. Okay. But remember, you borrowed that from your broker. So you're going to have to pay them back. How are you going to pay them back what you borrowed? You must buy it back from the market, regardless of what the price is. Higher, then you're going to have to pay more and you're going to lose money. If the price goes down, you're going to be able to buy that coin back cheaper because you have to repay them in that same coin that you borrowed from them to cancel your position. And now you keep the excess profits if you sold higher and then you bought lower. So that's a quick short selling lesson, really basic. But just know that what we have here is, let's see here. Yeah, so basically you can see that is okay, an example of short selling mindset and also portfolio management. So when it comes to the actual trading, we want to understand that how we're going to do that is pick our favorite coins. They all have different behaviors. They all have different types of charting. Okay. So what I want to do real quickly is actually just go through them. Let's have a look at the charts, get the update for the week, what's happened since last week. And I'll throw in a few examples of some indicators and technical analysis that we've done to help figure out what's going on. So yes, we looked at, all of these SEC requests being denied from going through the Ripple's financial records, just like, there's a lot of different things going on there. We can see here that also the different ups and downs in the news for overall the crypto market. It affects the prices of that day. We're going to pay attention to that, but I'm going to show you how I look at multiple time frames. So let's open up a TradingView chart. Okay, so you can go to tradingview.com. This is a free website. And we're actually going to go dive right into some analysis. So if you go here, you can actually type in any kind of coin. Let's type in BTC USD. Now you can click on whichever one or just type enter. You always have to have a pair. You're always trading two things against one another. Okay, one is measured in the price of the other. So if I type enter, we're going to pull up a chart of Bitcoin. This is a free version here. So what you're going to do is realize that, first of all, we have a very simple basic chart. 99% of people are going to be happy with this chart. Okay, the ones that are holding for 10 years or 7 years, they may be interested in this chart. I'm not interested in this chart. Remember, I'm on the other end of the spectrum. I like to hold positions less than 24 hours and make more money than those people holding for 7 years. Okay, potentially. So past performance is not indicator of future results. However, I do have a very, very, very strong track record when it comes to predicting prices. And how I do that is definitely not using simple charts like this line chart that doesn't have any other information other than what's the price done. It's not going to be useful for me to determine where the price may go in the future. So what we're going to do is we're going to click on full featured chart. Okay, we're going to teach you how to use the features. On your phone, you may just see this little logo here, the blue button. We're going to click on that. It'll open up a new tab, and we can close the other one. And then this is where we're going to get a more detailed chart. So right off the bat, when you start off, you're going to have a more basic looking chart. Okay. So let me see if I can find a clean one. I've marked up quite a few of these. Yeah, okay, let's do this one. Someone asked about it too. So what you're going to start off with is a very simple, clean chart that looks like this, okay? And what you can do, you can draw trend lines like this. Again, where we're just identifying one bottom, a second bottom, and a third one. And then we can anticipate where the line may go in the future, which will have meaning. You can see here the candle with the wick, it actually ended right along that line before it bouncing all the way up, okay? So that's definitely useful to draw trend lines. However, I'm going to show you how to now increase the information on this chart and figure out where can we draw resistance and support lines. Of course, you can draw them at the very top here, but I have a secret way where you can add more lines of resistance and support. Very simply, you're going to go over here. You're going to click on that little line, which is the trend line tool. And we're going to change on the right of that. There's a little arrow. Okay. That arrow will open up a drop down menu. We're going to click on horizontal lines. So we're just going to use trend lines and horizontal lines. Okay. So horizontal lines, we've clicked on that. Now I can go ahead and, go in here and click near the very top, and that'll insert your line. Okay. Now you're able to right click on this and click settings, and you can click on coordinates, and you can see we have exactly 342.5. Okay. So maybe what I want to do is say, let's see if I can put a round number like 350, type enter, and the line will show up exactly on that level. That is a resistance line for this chart. Okay. So I'm going to make a second one now. And I'm going to basically move that down to the peak here we've had. And I'm going to do another one. Let's do that one at the very bottom here. Okay. And then we can make that a green line. Okay. And we can clone that. And I'm going to make another one at some of these levels here. So we can see several key levels where we've had tops. All I'm looking for are where were the prior peaks. Okay. So there's one. Here's a bottom. Here's another bottom. So you can see a significant level here, here. Okay. So there's reasons why we're placing those charts at those places. Okay. Then we teach you another thing where we look at the actual numbers and psychological levels. So 300 is another psychological level, just like we had with the 350. So I'm going to put that at 300. Now you can see I may have been off a little bit. So what do? I right click settings, and I'm going to type in 300 to get it precise and press enter. Okay. And that'll move the line exactly to 300. I actually want to place another one at 250. So you can see I have 251. So chances are I was incorrect. And I'll change the settings to here, say exactly 250 and enter. And that's probably where we're going to see the majority of this power. So a quick shortcut. If you don't know how to do that, if you're not confident yet to find where are the points where the price changed direction to draw the lines there, what you can do is there's a tool that can help you. So we're going to go up here where it says indicators. Okay. And this box will open up, and we're going to go to the very bottom option, volume profile. And we're going to click on the very bottom option again, visible range. Okay. And when you do that, it'll actually open up this indicator over here. So what you can see is two things. Number one, these bars represent where the price like to hang out the most. Okay. And here, so you can see where the price spent the most time, and the absolute biggest bar will give a red line. Okay, so that is indeed a very powerful level of support. So you can just use these and draw your support and resistance levels, just copying these levels. Okay, and then here's another one. So that is definitely one way you can do it. Now, what I do though is I'm going to change the settings of this. It says VPVR. That's the one over here. I'm going to click this little gear icon, settings, and I'm going to change this to say, first of all, instead of 30%, I'm going to make it 50%. What that does is it makes it stick out even further, so it's easier to see. And I'm also going to change it to be on the left side. Okay, so instead of on the right side, I'm going to put it on the left side to get it a little bit out of the way of the chart here, where we have more information. And I'm going to click on one more thing on inputs. I'm going to change 24. I'm going to change it to 48. I'm going to double the amount of these bars. So there'll be twice as many of them, and they'll be half this thinner. Okay, so now there's more of them. So what I can do now is I can actually see where are the key levels. Okay, so what I'm going to do now is go over here on my draw tool where it says brush. On the right of that, there's an arrow, and I'm going to click on rectangle. And I'm going to go ahead now and I'm going to draw a bunch of rectangles that coincide with these bars. Okay, and I'm going to drag them all the way to the right, all the way to the current price. Okay, and then we got another one over here. I'm going to click the rectangle again, basically overlapping those two bars. Okay, we got a strong support there level. And I can continue this over here. You can see exactly where we drew the support. Okay, so that agrees. And we have another one up here that's in the background. You can see a little bit up here. And I can just move that over. Okay, so there you go. So you got your support and resistance levels. And then in between, we can also see this bunch over here. So I can also put that one in, which we do have on that green line. So that coincided with what we found also. Okay, so no other bars on the left here, even in the background there in the shaded area, other than that little one maybe. Okay, so we got a thin one here. Okay, so what we can see now is that the price will typically like to hover inside of this range. That's why these bars got wider, the more time it spent there. And when it finally escapes that zone, it'll fall crashing to the next zone and hang out there, and crash to the next zone and hang out there, and keep repeating that in both directions. Okay. And then finally, when it leaves one zone, it goes quickly to the other. So that's how we can use these levels to identify where we may want to enter a trade. And how I would do that, let's use this example, is look at the current price. So what are the two immediate levels that we're looking at? This one and this one. Okay. So in between is a opportunity for a trade. So if we can escape this blue rectangle, okay, what's going to happen is if it falls below that and escapes that convincingly, we can quickly fall all the way down to here. So what I'll do is I'll maybe sell right there. Okay, and we actually have a tool for that over here if you're interested. Basically what that does, we can do a short position, and I can say, okay, I'm going to sell here. If we can go below that blue line convincingly, I'll put my stop loss above this purple box, and I'll put my target all the way down to the next gray or blue or purple box rectangle. Okay, and there's my trade where I will be waiting for an entry. And if the price does fall first, not right now, I need it to fall convincingly, then I will sell and ride the quick move all the way down to here. Okay, and that will be our profit. And you can do this between every one of these zones back and forth, now that you know where the price likes to hang out and chill and spend lots of time. So that's something we are going to see a lot of. These red shows that this is a stop loss. So that means if it's red going up, that's where I'm losing money. If it's green, that's where I'm making money. Okay. in that direction. So let's have a look quickly at all the charts on the crypto ones that we have here listed, and also the ones in the chat. So really quick, let's look at Bitcoin. What happened? Okay. So this one's hit already my target, my second target. So if you ever have something going off the top of the screen, all you do is you click on this sidebar and drag up or down, and that will shrink the screen so you can fit it. I'm clicking and holding, okay? And you can do that to make sure you can see all of the candles on the screen. Okay, so we actually had a, let me actually get rid of this. It's in the way. We actually had a community member actually point this out last time we were together, mentioning the cup and handle. Cup, right? So what you have, just like the name implies, you have a cup formation. So price may be doing something, it falls and makes this shape, okay? Now it has to be horizontal here. So the price is exactly sideways. And now from this point, we're going to see the price go down. And this is actually a bullish sign if it drops, because this is now a cup and handle formation. There's a cup shape from here to here, and then there's a handle shape. So what this does, how you use this is basically now I'm going to show you how most people do things, and I'm also going to show you how I do things, so you have both. Most people will simply measure from here to here, okay? And what they're going to do is they're going to copy that from this red line and call it as the target, how high up it'll go, okay? Now, that's not how I do it, although that is a correct way. My preferred way of doing this is actually not looking at the dip from top to bottom of the cup. I actually like to look at the top to bottom of the handle, okay? And I'll draw a circle representing that height. And what I'll do is I'll place two more of those circles on top of that horizontal line, like we've done here and here. What this does is it gives me two exit targets, okay? So in other words, I can now see if we break above that horizontal line, I can partially exit my position here and partially exit it here. So I got two chances to get out with half the money in case it doesn't go all the way up to the very top, like we're still waiting on this one. This one, it did hit this target. It did not yet hit this one, okay? So I've actually made money on this particular call. One thing I often say is that if something's gone up, the more it's gone up, the more likely it is to go back down. If it goes up slower, it's less likely to go down or slower down. So despite that, last week I had mentioned that, yes, I agree with this cup and handle, that we can, despite being at all-time highs, call for a record high. And we got that just a few hours ago, okay? Not quite this formation of the head and cup and handle, because we did earlier have a smaller handle. However, I was mentioning if the price doesn't go up right away and it continues lower like it did, that just makes the handle even bigger, which makes the target even bigger than having just three of those, okay? Slightly higher. So that's how we look at the cup and handle. That's just one shape that happens to be important. I also noticed it happens to be important in stocks. Even right now, I noticed even on the Dow Jones, we have a cup and handle formation happening quite often. But anyway, let's stick with the crypto. So if I actually show you on Bitcoin that cup and handle, then you can see it that we are still potentially looking to go a little bit higher. Okay, my target is around 68,000. We're only at 63. If you ever see the chart is too cramped, you can just right click and click reset chart, and it'll fit it nicely on the chart. Don't let the chart go off to the right of the screen. All right. And also don't leave too much of a gap on the right of the screen. You want to have a little bit of empty white space here What that allows you to do is draw arrows, okay, and make sure that you're seeing the current price. Let me pull up the chat here. Okay, so with this shape, when it's finished, it's after that done. So it's hard to say what it'll do after that. It's 50-50 at that point. Okay, that's no longer our business. We see the pattern and this shape, and that's all it tells us is what is it going to do up until that point. At that point, I will probably not be trading it. You don't have to always think, what will it do? Every single time you exit a trade does not mean you need to automatically enter a new one. It is okay to be on the sidelines. In fact, if you are on the sidelines 75 or even 95% of the time, you will pick the top 5% of the time to be in a trade. Okay, and I'll show you how to do that. It's by looking at multiple time frames. Because you have good news on a short-term chart, may not be good news on a long-term chart. If you wait for the long-term chart, medium-term chart, and short-term chart to all agree with one another, then you have a little bit more peace of mind knowing that no matter if you're a long-term trader or short-term trader, it was a good idea to go in that direction. You're going to be in a better situation. So at that point, if we hit 68,000, what would more likely happen than not, if the price did shoot up to 68,000, chances are some of the indicators on the bottom of the screen would also shoot up, meaning that they're too high and ready to go back down because they work like a roller coaster. I'll show you what I mean. Okay, so you can go to indicators, favorites, or actually built-ins, and there's a whole bunch here. I've started a few of them, so you can take a picture of that. I've got Bollinger Band, I've got MACD, I've got stochastic, I've got relative strength index. These are and moving average, exponential, and moving average. So those are the ones that I teach first for people, and they're already more than enough to get really high accuracy if you know how to combine them. Okay, so I'm going to click on them and turn them on, and then your screen should look something like this. Now, on the free version, you can only have 3 indicators at a time. I have a Pro Plus version of TradingView, so I can have 10 indicators at the same time. And basically all we're doing, let me pull up a daily chart. Okay, so what we're doing here is we're looking at this roller coaster here. So basically, you know, when the price goes up, price goes up. When the stochastic indicator goes down, price went down. When stochastic indicator goes up, price went up. When the stochastic indicator went down, the price went down. Started making our cup shape. Then the stochastic indicator went up, finished making our cup shape. And now the stochastic indicator only went down a little bit, but it was enough to make our handle. Okay. And we had said that there is a risk of this falling all the way down. However, we decided that that cup is a bullish sign. And if we see the price of the stochastic indicator head back higher, so it's not automatically always going straight up and down, then we would see an all-time high. As long as this indicator stays sideways at the top, it allows prices to continue moving upward, but there's always that risk that it can fall at any time, the indicator. So you know when it's going against you and is more dangerous. Let's look at a different example on Ethereum that's not, I was going to say less messy chart. Let's do Binance Coin. All right, here's a cleaner chart. So you can see, I'm actually going to zoom in. Let's go hourly chart. Okay, and I'm going to zoom out to the past. Okay, so no matter how far back you look, you can anticipate where are opportunities, because you can see here when the stochastic indicator is at the top, it's the similar thing that we were looking at earlier with the resistance and support. So think of this as the resistance and think of this as the support. Okay, so in other words, and the yellow line, of course, in the middle, we'll put that into. Okay, so in other words, the price is like a house. When you have a building, you know, you've got your your house over here. And guess what? The ceiling is the resistance. And the floor is the support. So it's easy if you're standing in the room or throwing a ball in the room to go down to the floor and bounce higher, just like it is easy to hit the ceiling and bounce back down. Okay, so that's how this works. Okay, so going back to the indicator here at the bottom of the screen, we can see when we've hit the ceiling, chances are it'll go to the middle at least or all the way to the floor. And that's exactly pinpointing this opportunity, okay, to make money to the downside and profit when it's going down. Or if you want to, you can be on the sidelines if only you want to make money when things go up. So this actually tells you a good higher probability time when you may want to take money off the table prior to a decline happening. Okay, and this repeats quite often. This one didn't quite happen from this very overbought area. So there's more risk of falling when it's higher. This one was lower, so there was less risk of falling, but nonetheless it fell. Still, we had a decline. And then finally, this is actually a good lesson. If it stays up there for a while, that enables the price to continue rising, the momentum. So you're looking for a fresh crossover to the downside back into this purple zone. That'll signal to you that that's it for this move. And you can see a little bit the price paused here, even in an extremely bullish uptrend. Okay, so where would we be now? If I zoom back out to the current price on this 1 hour candle chart, what do we see right now for this stochastic indicator? Are we near the very bottom looking to go up or near the very top looking to go down? And I'm not worried about these halfway moves. I'm only talking about the all the way to the bottom or all the way to the top. Which one are we looking at being more likely going forward from now? Up or down? More likely this will go up. Okay, so this is looking like it actually is a good opportunity for the stochastic indicator. But then I have different ways of teaching how to use these other indicators like the MACD. And what we can see here is that this has actually been declining. And if we replicate that, then we can see that the price may actually go down, okay, even further. I'll show you how I actually do that. So, we'll look at the peak here, the absolute peak, and then the current price. And we can see that the line is going straight from here to here. And all I'm going to do is replicate that, draw one exactly parallel, same length and everything. And we're going to start it not too far in the future, not too far in the past. Has to start at the exact same time, go vertically straight up. And we're going to go to the top of the candle. Why? Because we're looking at the peaks of this MACD, moving average convergence divergence indicator, peak to peak to peak. Then we're going to go from the top of the candle. And that shows that the price, when it went too high, it dropped to the line. When it went too low, it went up to the line. When it went up, it dropped to the line. When it went down, it went up to the line. It stayed along the line for a while like it was supposed to. And then it kind of diverged. It did its own thing until the market said, no, you got to listen to the indicator. And it went straight back down to the line again. So where are we at right now? There's a slightly bearishness that I see on here for this MACD divergence. So that's opposite. Going down should be a red arrow. So I don't teach you bad habits. Okay. But here we have a green arrow. So they're conflicting. One is saying down, one is saying up. So what do? We don't trade. Okay. So I can analyze a chart in 5 seconds and see that it's not worth spending any more time to pull up any more indicators. Okay. And I can move on to the next coin. So you can see here, another one is the RSI indicator. Here it says 46.09. These are live charts, by the way. So again, this is kind of close to what we called the yellow line in the middle. And we're exactly halfway, kind of between the red line and the green line. So it's not a good time to buy or sell based on the RSI strength being close to 50-50. So that's not some time that we want to buy. Again, This is like a resistance also on RSI, and also a support down here. And we want to do is sell when we're closer to this resistance. Why? Because we can assume that the price will go down to the middle, and there's our trade opportunity. Okay, we don't have that yet. So what do we know? What we can tell is that we're going to wait for this indicator to rise first, and then we will be ready to start taking on selling positions on Binance Coin. Currently, I would not touch it. Another thing I mentioned is where we're looking at the 1 hour time frame. It says 1H. What you want to do now is confirm. Let's say all three indicators said that this is going to go up. Okay, let's pretend that they all said, oh, this is going to go way up, this is going to go way up, and this is going to go way up, so the price should go way up. But this is a 1 hour chart. What we do next is we confirm that on a bigger time frame. So I'm going to click on 1 hour, and I'm going to change it to 1 day. Okay, and then we're going to do the same thing. And if we saw something like this, showing that the indicator is now near the top, actually that's where we have the resistance compared to the support, where is the direction that we're likely to see next is down on the stochastic. Looks like this is topping out. Also looks like this RSI is too high. So again, we're in this overbought territory in this white zone, and this can easily fall back down into this purple shaded area and go back to 50. Okay, so you can see we're at 73.5. You can't even see the lower numbers. I will turn them on though. So let's squeeze that in. Okay, so now I can see where 0 is and 100. So you can see we're really at the top. So this is overpriced coin, Binance Coin, and that can see falling easily. So if the 1 hour chart said green, green, green arrows going up, but the 1 day chart says red, red, red arrows going down, are we going to trade that? No, we're going to skip it. We're going to go on to the next coin. We have 19 more of them to go through, and we're going to find one where all the arrows are the same color. They're either red, 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 red on the short, medium, and long term, or they're green, 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 green on the short, medium, and long term. And yes, I do use Fibonacci, definitely, and I use it a little bit differently than most people. How that would work. This is now a more advanced method of charting, but Fibonacci retracement, fib retracement, you're just basically clicking from the very bottom. Let's use this one here. Going to the peak where we were at, not counting the wick. Okay, and that'll give me the target where we can expect a support line and a second support line and even a third one. Okay, now I said wick and body. So when you have a candle, you have your wick. So I don't count those. I'm drawing the lines based on the body. Okay, I'm not drawing the lines based on the wicks. That's my preference. It's about 50-50. Half the traders use wicks, half the traders use bodies. And I have to mention that. But personally, I only use body to body. And that's a key. If you ever have two candles, don't ever use, say you're drawing a line from the body of the candle to the wick. Don't go from body to wick or wick to body. Okay, be consistent. That's the only must. Okay, if you're using the body, go to the body. If you're using the wick, go to the wick. Okay, that's how you're going to always draw. Okay, now there are instances when I will use the wick. There are exceptions. And that's when I combine two Fibonacci's, for example. So what I've done here is I've drawn from the body of the candle to the body of the candle, ignoring that wick and ignoring that slightly lower wick. Okay, so actually let me zoom in. Okay, so you can see here, we've drawn from this body to this body, a straight line up, and then now we can see how far down it can go, usually halfway. Okay, for Fibonacci. How most people use Fibonacci is based on you know, if it goes up there, they've drawn it. Now what they use are these targets here. So they say, you know, if this goes down a little bit, it'll go up a little bit. They say if it goes down a lot, then it'll go up a lot. And they use that as a potential target into the future. I don't like using it for that reason. For extensions, I like to use Fibonacci just for retracements. Okay, how far down it'll go. Usually 50% is popular. 38 is really popular. Okay, it can vary. Expect the price of here, for example, Binance coin to hit 460 because of that reason. Okay, now I'm going to show you a trick. Another way to draw resistance and support lines is basically what we're doing is I've done the body. Now I am going to use the wick. Okay, I'm going to go from wick to wick instead of body to body. So I'll draw a second Fibonacci, actually over here, Fibonacci retracement, and I'm going to do a second one from there to the top of that wick now. Okay. And what that does, it gives me a place where I can now draw my rectangles. By combining the two, I can find certain zones where the price may like to stick in the future or be trapped within. Okay. And these are getting wider and wider. I'm sticking the 50% with the 50% level. And I'm going to do the 38 with the 38. So there's the 38 and the 38. Okay, so those are the targets that we can see where I would expect the price to go down to. I can do one more here. Okay, so in that shaded area, that's where we can expect the price to hang out going forward. Okay, so that's by combining using the body to body and using the wick to wick, overlapping Fibonacci's. I don't want to get too complicated here, though. So let's actually zoom out again. And another thing you can do is because we use this starting point and this ending point. Another thing you can do is now use this starting point with that same ending point and do another Fibonacci to see where the halfway point is. Okay, so if I did that, you're going to see this. Okay, so if I overlap those, you can get multiple targets. So what happens if we zoom in? Let's get rid of this drawing. We can now see these lines over here are further out. Okay, and they actually tell you the number. So there's my 23%, here's my 38%, here's my 50% extensions. You can see these lines over here. Okay, and they extend now out to here, which overlaps with some other lines I've drawn in the past. And here and here. Okay, so we have key levels where we can expect the price to pause. I also have, you can see a channel here. There's green lines. So there's upward trending channels, downward trending channels, and sideways trending channels for resistance and support. So definitely I don't like Binance coin right now, is the moral of the story. Looking at, let's just go through a few bunch of them here. Okay, so what we can see here, a simplified, we've got 3 support lines here. What I can do to get more targets is turn on, since we're on the daily chart, I can turn on my 50-day moving average, my 100-day moving average, and my 200-day moving average. It's the pink, blue, and black line. Now, all 3 are down here. Okay, so how a lot of people use these moving averages. Again, you get them by going into indicators and just click on moving average or moving average exponential. Okay, moving average, I got 3 of them. So what happens now? When you have those 3 lines, the pink, blue, and the black, typically when the pink line crosses above the black one, so the 50 is crossing above the 200, that's a bullish sign. Okay, so here the 50 crossed over the 100. It's not as good. Nonetheless, it's a bullish signal that up until this pink line falling back below the black one, we're in a bullish uptrend. So, you might have missed out on this move here, but you would have caught this move up here. Okay, so that's how most people use the moving averages. I personally don't like using them that way. Okay, why? Because here you can see the pink line did cross below the black. That would signal a selling opportunity, and the price shot up instead. And then the price went back above. The pink line crossed back above the black line. That would become a bullish trend. And instead, the price did the opposite. It went down. So I don't like using these indicators how most people use them. They call it a golden cross when the pink line crosses above the black. That's becoming now a bullish golden cross. And likewise, when the pink line crosses below the black line, that is considered a death cross. And now it's going to continue being a downtrend until that pink line crosses back above. I don't like doing that. I have a better way to show you. Okay, I like to treat the price, whatever you're looking at, to be the further away it is from those lines, the more bearish I am. In this case, when the price is above them. Okay, if the candles were to go down to here, I would become more bullish if they've got more distance to travel just to come back to the average. It's called the moving average. All it does is it takes the prior, we're on daily candles. So if we're looking at the 200-day moving average, we're looking at the last 200 candles, averaging them out, and then predicting the next one. Every day we add one new candle and we remove one from the back of the 200. Okay, and we continue drawing these lines. The way I like to draw is the price should remain eventually coming back to those lines. When it escapes, that's more likely it'll come back to them. I don't like trading when we're in between them. There's consolidation here. And you can see here an example of when the price exploded way up to here. Is that far away from these three moving averages? It's the furthest it's been on this whole chart. That's why I'm extremely bearish at that moment. Okay, because what's going to happen is the distance between the current price and the moving averages will start shrinking. Okay, that's expected. Then they got wider again. So you could have lost money there. But if you had a stop loss that didn't get kicked you out yet, you could see the price, what it did right after that. The price crashed all the way down back to the three moving averages. Okay. It went all the way down to the black one even. So you can look at just the black one too if you want. That's how I look for opportunities. I don't wait for them to cross over one another like most people. Okay. So that's how I find opportunities, definitely using the moving average. And you can basically always remember to look at the past. So, if we managed to go this far away before, it's not so out of the ordinary to go that far out of the way again. But if it went more than that, then that was an opportunity to sell. You can see the price quickly crash down. So always look at the past to look at behaviors, to find patterns. And that's something I'm really good at, to find patterns and repetitions in the markets. For example, here, even on the indicator, you can see this formation here, this formation here. It repeats, okay? You can anticipate when prices may do things based on the history. And every product, every coin has its own behavior. So don't go trading everything at once at first. Get in the habit of understanding the daily movements of one thing before getting into the other. The good news is you don't have to learn everything. You only need to learn one strategy. If it works, just repeat it. If you then have the patience and you become bored, you want to be bored because you do it for so long that it becomes repetitive, then add a second strategy. Okay, so there's Binance coin. Where is it right now? It's way up here. So would you say that that is a good time to buy or sell XRP based on the moving averages. Okay, we saw when it went up that much, they came back down. When it went up that much, it came back down. Now it's up this much, and all the moving averages are down here. What do you think it'll do? I would put my money on going down to these moving averages, or at least partially halfway. That's why I don't have a whole bunch of supports up here. So I'm actually considerably bearish XRP on the technical chart side of things, separate from the news. Okay. And I was here a couple months ago saying how XRP is going to basically be benefiting from lawsuits with the securities commissions if they come out with unscathed, which is what just happened today. So I anticipated that news months ago and this move up. Okay, but now the chart says it's a little bit overpriced, and markets tend to go up too much and they tend to drop too much. So you want to balance it out. That's why the Fibonacci is a powerful indicator. Okay, so XRP, you got to be cautious. We also have another indicator here, a Bollinger Band. So remember how we had for the stochastic indicator down here, how we have the resistance and then we've got the support, right? And it likes to fluctuate like a roller coaster, basically back and forth. Okay, so now we can see it's ready to drop. Also, just like this roller coaster of a stochastic with the fixed ceiling and a fixed floor that doesn't move, we have this Bollinger Band, which is working the same way. The only difference is that the ceiling will now change higher and lower. And it'll also get narrower and thinner. And they can both go up, they can both go down sometimes. So right now, are we near the ceiling or are we near the floor? We're right at the ceiling. So the path of least resistance is this line here, which is the halfway point. So for the price to come down all the way, which is actually close to this support line here that I have around, let me get the price for you. It looks like 111 from 177. Cannot be ruled out at this time. Okay. With a potential pause along the way, maybe here we had a little bit of price pausing. Okay. If I do my Fibonacci, you're going to see the same thing. Okay. So we can see that's the 38% Fibonacci. Okay. So you can see the number here is 38%, right where we have this support that I just drew. So I can anticipate easily the price going to 1.36. I'll be, in fact, surprised if it does not. Okay, despite the news. So now I'm hoping that you can see that it's important to not just look at the news or just look at charts, but to look at both. You will then, use the chart to figure out what you want to buy and why, or the fundamentals rather, why you want to buy them, looking at the big picture, and then use the chart where you're wanting to snipe your entry, snipe your exit, and pull the trigger with nice timing to pinpoint tops and bottoms. So this is a learnable skill. This is actually quite easy to see that this will go down. Okay, we'll see if it actually does happen. Okay, so what I would do, actually, I'm going to draw that in here. I'm going to put a short position in right now at the current price. And I'm also going to put the stop loss higher than the previous wick. Okay, so if you can see the wick here. So if we do go up, because anything can happen, there's a chance that that may find some resistance. All right, especially since that stochastic is way too high up here. You can see all of these are ready for the next big move. Is not to the upside. The best case scenario is that they stay up here for a little while longer, allowing the price to continue higher, but the bad news will come. Okay, so I would put my money on it coming sooner rather than later. Again, what we do is we look back in the past to see how long has the price managed to stay up here in the past. So we'll just zoom out. Okay, not very long. When for this particular coin, the behavior is as soon as it's up there, it goes back down. And we can see even how long that takes. 1 month exactly. From November 16th to December 16th last time, from peak to bottom. So a 1 month decline could happen at any moment. I would say now would be a good timing. So this is a daily chart. If I zoom in on the 1 hour chart, we can maybe anticipate what's the situation here. Okay, so we can see that this is slightly above average. It's not really up here, which would make me more confident to sell. We don't really have a big divergence here because we can see the price did go how it was supposed to. Okay, for the most part. However, when we continue it to the current price, it looks like it can come down. Okay, so again, that price is around 1.5. Also, we have a head and shoulders pattern that I often teach here. We can see we have this shape happening. So here is the head and shoulders, potential head and shoulders formation. And we can see that the price could drop down to there just to get to the neckline, where it needs to determine if you want to sell is usually below the neckline. And then it'll fall by the amount of the head. So we don't even have to have a break of the neckline, which isn't always easy, especially when you have a blue line over there, a blue moving average of a 100-hour moving average. But if it did break below that, we could see going all the way down to the black line. And this area, we have confluence at $1.37, which is what we said earlier. But I would be surprised if we don't hit $1.55. Let's say $1.57, definitely below $1.60 on Ripple. So we've got the 1 day candles, the long term, agreeing with the medium term. Okay. And also the indicators are sort of neutral here. 51 is very neutral. But we do have a slight divergence here. Okay. So not a big move down, but nonetheless, that's 20 cents. A 20-cent decline, it's still a decent drop. We're looking at over 10% drop in Ripple. And how we determine how long it'll take is, again, we just look at how long it usually took for a decline to happen. Okay, so we can measure that on the bottom here, and that's a matter of 1 day. So I'm anticipating a 10% drop in Ripple in 1 day. That's how bold we can make predictions, and I've still been about 85% accurate consistently for 5 years on crypto. Okay, so let's go now and zoom in even more on let's do the 15-minute chart. Okay, so we can see the 15-minute chart is still rising. Maybe I'll wait for it to get to here and then sell. And we'll write this next stochastic down here. But already we can see that this is getting lower and lower, whereas the price, it did what it was supposed to. So there's no divergence on the short term. Okay, so this would be like a swing trade. We're going to hold it for at least a day. So Ripple, be cautious. If you are holding on to it to the upside, be careful. If you don't know what stop losses are, that's the next thing to learn. I'm going to cover stop losses next time, 100%. I'm going to go over stop losses because that's one tool that is very powerful for portfolio management. Today and I'm also going to look at the technical side of trading. So there's a lot of things we need to cover. You can't really just do this in 1 hour. As you can see, I'm struggling, but to cover as much as I can, and it's been 2 hours already. So, we definitely want to be able to do this every 2 weeks, go over in detail as much as possible, answer your questions when it comes to trading. But, there are ways that you can learn this. I have a way to get a hold of me on a daily basis, not just once every 2 weeks, where you can get access to this information. And actually, you know what? Let me see here. Yeah. So you know what? I'm just gonna show you guys for respecting people's time, because I know we have people on the West Coast. Okay, let me see here. Yeah, so definitely we can see here that, you know, there's an opportunity to learn this skill again just by trading cryptos. You're the first 1% of people that are trading cryptos. Congratulations. Now my job is to make you the best 1% of those people that are actually trading. Okay, so that's what I want to do for you guys. So, you know, I can't cover everything in 1 hour or two even, or even if I had 3 days with you. So this is something that you know, I teach. This is just a tiny sample. We didn't even touch on 1% of what there is that you can learn. But again, don't be overwhelmed. You don't have to. What are all these confusing lines? When you see that I use the same ones every time, you start getting familiar with them. You will become confident. I actually have a student here. One of my students here, who's actually just in the room. Maybe Rebecca, if you want to share a quick word on how you're progressing in your journey with learning trading, and was it overwhelming and difficult to learn at first, or what are you doing now? Because I know you're also teaching it. Oh, you need to unmute you. There we go. Go ahead.
There you go. Can you hear me? Okay, awesome. Hi guys, my name is Rebecca Smith. A little bit about myself. I used to work at a call center as a manager there for 7 years. And no matter how hard I worked, how long I worked there for, I couldn't seem to, you know, get the raises that I felt like I deserved. So I just thought, you know what, I need to find something else, find something where I can kind of take control of my life again. So I found trading. And trading has been a journey, you guys. It's not something where you can just get rich quick overnight. But once you stay consistent and you're practicing and you put in the hours, the payout is so rewarding and so worth it. And I had the pleasure of learning from people like Robert. And basically now I can teach the basics to new people, which is pretty cool, because 2 years ago, I had no idea what Forex even was. So
2 years ago, you had a job that you hated.
yeah, I was able to quit that job. So I'm just so grateful doing this now. And I feel so much more happy and fulfilled. And I can do the things that I love to do and when I want to do it. So this is a very powerful and liberating skill. And I'm happy that you guys are all here learning it as well.
Awesome. Thanks, Rebecca. We appreciate you. Yeah. So, oh, wow. So, yeah, I hope everything works out with, I see someone here messaging me. Yeah, guys. So if anyone does want to get a hold of me at any time, I do want you to know that there is a way that you can book an hour with me anytime. You just go to this website, robertpaddock.com. I'll put it in the chat for you. And please utilize this, because I don't in the future see having time to do one-on-ones with people, but I do have the ability now. So this is something that I can share with you guys, go over any skills wherever you're at right now. I can show you how to go from beginner, completely brand new to trading, like you saw 99% of people are, and I can elevate you to become like Rebecca, where she managed to quit her job within her first year of learning how to trade, and now she's even going and helping me to train the next people how to learn the basics of trading. And you too can one day potentially be helping others to learn the skill. We're not just giving people fish, we're teaching them how to fish. We're empowering people to have full control of their decision making and power of their own investments, so they don't have to trust other people with that. You know, you definitely have the ability to surround yourself with students that are of all varying skill levels, and myself too, right? So do understand that there is the possibility to learn. You just have to be careful who you're learning from. So, I do want to mention quickly, I do have a program that you can plug into really quickly. If you want to learn more about this trading, rather than waiting 2 weeks, you're going to get access to me on a daily basis, mentorship from myself. You're also going to get mentorship from hundreds of other students, okay, or educators that are vetted traders. You're also going to get scanners that look for trade ideas, such as this. This is actually a trade right now. You can see all these different altcoins. So you can see YFIU, okay? Honestly, I've never even heard of that coin, okay? But this scanner, in a matter of 2 seconds, by opening up this scanner, gives me trade ideas that you can get on a daily basis at different time frames. So we learned looking at different candles. These are 15-minute to 30-minute candles, or 4-hour candles and daily candles for longer term swing trades that you hold for 5 days. You can have trades of varying lengths depending on what suits your schedule and availability. But you can see here, this is very simple. I'll help you learn this. It shows you where to use your entries. It teaches you where to use your stop loss. I never had stop losses when I started trading, and I lost big amounts of money, and I'm too embarrassed to say how much, not knowing what a stop loss is for 5 years. Okay. Here from day one, you're learning what a stop loss is. You're learning where to put the stop losses. You want to, then you can, at your own risk and liability, copy the exact numbers here and type them into your phone. We will show you how to set up the apps, how to install the demo accounts with myself and Rebecca's help even. And you're going to learn how to profit when the price goes down or up. Okay, you got your take profit 3 target, take profit 2, and take profit 1. And this scanner is highly accurate. This is a fresh trade opportunity right now, but we can look at some of the older ones, right? So there's Uni. Look at this one here. So this particular trade, it called the harmonic scanner, is based off of Fibonacci. It's a very popular pattern that traders from around the world use for decades. This scanner looks for this very advanced system strategy that I actually benefit from as a sophisticated trader, getting a shortcut in a matter of seconds, seeing opportunities like this. When this was a still fresh opportunity, we can see that the price went from the entry straight to the take profit 1 and 2, and then finally take profit 3 and even higher. And it showed where we can put a stop loss. I'll also teach you with Rebecca's help where to modify your stop losses to break even, so you have a risk-free trade. And this can continue going up. You can turn into a hodl position, or you just keep increasing your stop loss now, so you have your stop loss at take profit 3, absolute bare minimum where you're going to get kicked out of the trade. So if this were to crash all the way down, you're going to see that you'll get out at a profitable position instead of breaking even or even having a negative loss. So proper mindset, proper trading plan, proper portfolio management, and more importantly, indicators. This scanner is based off of TradingView, so it does allow you to benefit from all of those indicators that we were using earlier. You can see relative strength index, you can see stochastic. So all of those you can put onto this chart, onto this scanner that looks for these trade ideas. I teach you how to use them all to make it as simple as possible so that even a 5-year-old can learn this, even if they have 15 minutes a day only to learn trading. So this is a very powerful tool. These scans and these trade ideas, actually look at this, there's Binance coin, okay? So this actually called for as an example, it actually called a trade idea on Binance coin back here. So we can see at that time, stochastics was down here, ready to go up. So that was a good signal for me to take. I would have agreed with it. And then I'm going to close this indicator. And now you can see it exactly tells you where to put your stop loss, where to enter, at what price. There's 2 choices to enter. And then you got your take profit 3, take profit 2, and take profit 1 target. So we've already hit, since the entry, the second take profit. Okay. And now it may go on higher according to this scanner. So I like to see when the scanner agrees with me, when it disagrees with me, for myself, even sophisticated, experienced trader, to feel more comfortable and confident in my decisions. This is a very powerful tool that is definitely part of a program that we have, which teaches you how to trade. Okay, so we have here, an education program. You can see here that it actually gives you different academies. So what we have here is DCX. This teaches you digital currency trading on an exchange and digital currency trading on a leveraged exchange, which means you get 100 times leverage. This one is you're buying the actual coin with maybe 0 to 5 times your money. And here you're buying not the actual crypto, but you're trading the price of the crypto exactly the same way it moves with the 100 times more money. And if you click on those academies, you'll see really quickly that they open up and they give you the videos. You just click on start, and that'll enable you to watch all these videos, short, simple, easy videos to learn trading. What is everything you need to know step by step in the logical order. This is going to save you decades of learning curve down to just a month or two. You're going to watch all these videos. You're going to become a very comfortable trader, know exactly what it is that you need to know and why. And these are videos that are easy to follow, and you can watch them at your own flexible schedule. Okay. So this is very, very powerful lessons we have. On top of that, on top of the scanner, you're getting access to all these top traders. Okay, so these are traders that are trading around the clock live. You can see their schedules. You can see we have digital currency here. All these educators teaching around the different days of the week. In addition to getting access to myself, my lessons, my mentorship, you're getting 100 other educators also teaching you how to become a more efficient trader, a more safe trader, and more profitable trader. So a lot of different strategies, a lot of different styles, from beginner to intermediate to advanced. You can click on one of the educators, see when they're on live, and using live charts to teach their strategies. And you can even interact with them and ask them questions. If you missed the live session, you can just simply click on watch again and see the recording. And they're talking about live charts on that session. So you're going to learn much more rapidly than simply, attending a presentation like this, which is good every 2 weeks. You're still 99% ahead of the rest of the population. But this is where you're going to learn how to become the top 1% of traders, which are only 5% of crypto enthusiasts, which are only 5% of the population. Okay, so you're becoming the top 1% of the top 1% of the top 5% of the top 5% of people by still being here right now if you're here. Okay, so congratulations. And this is going to help you watching these favorite sessions, and these recordings are going to give you tips and tricks for how to elevate your game. You got your best risk management class ever here. And these are going to give you the tools, resources, and confidence you need to win. And not just win once, win constantly and consistently. You've got all these scanners, you've got all these live lectures like Netflix of trading with so many educators. You can see there's some educators going on right now. Here's a trader. I'll just play you a couple seconds so you can see what it looks like. As we speak, he is live.
Myself to actually even have the viability of pushing the blue or the red button.
Okay, so he's teaching right now as we speak. People are interacting, and he keeps looking up to answer all their questions. This is something that I'm going to provide you in addition to myself to answer all your questions. The trading on exchanges, trading on leveraged exchanges, and even a little bit of trading on money, Forex itself. The price of currencies is important because it affects the price of cryptocurrencies. There's a direct correlation, and I teach you how their relationship works together. This whole thing, this whole back office here, you can get access to it. I can provide that to you. And guess what? You're getting access to myself, all these educators, and the scanners for no extra cost, other than the initial one-time enrollment fee. Guess how much this scanner alone is worth? This scanner alone is worth $5,000 because you can make several $100s on a single trade that is correct based on this trade idea, rather than trying to guess what the prices will do. Here we have Ethereum. Look at this trade. It called Ethereum. It said, that this was a trade. It actually wasn't perfect, but here's XMR. Here's another trade. So you can see this one. It went down, but first it hit the take profit 3 target, exactly as it had called it. So it pinpointed where the price would reverse. So this is a very neat and handy tool to have, not to mention my own live classes that I do for our team. And we're in pre-launch. I'm planning to expand this to be a big rollout we're going to be doing in the coming months. But this is something that I want to give early bird access to you guys and get access to me and pick my brain, learn trading on as much as you like, however much time you have to dedicate to learning. You don't have to have lots of time. You just need to have the want and desire to learn trading and become like not the other 95% of people that are not trading. They're just working to exchange their time for money rather than making their money work hard for them, like 5% of the people who make 95% of the profit. So this is something that you can do in trading market is the one you want to be in. Okay, a lot of people are missing out that are not trading. This market is open 7 days a week. 24 hours a day. You can make money from it, and it is becoming the craze. Everyone is wanting to learn because it is the future of money. It's over 2 trillion market cap, soon to be 10 trillion, exceeding gold's market cap. It just exceeded Brazil. So, the future of money, payments, this is something that everyone is going to want to learn. You get to be the early adopter if you're the first 15%. Okay, so anyone that joins this year to learn about crypto will still be an early adopter. You can actually be an innovator. Remember that chart at the very beginning, the first 2.5% of people. So congratulations that you're going to learn how to have your money grow profitably, correctly, and quickly. So this is an academy that's short, simple, easy videos. Just to recap, you're going to learn from top experts around the world how to grow. And this was all created by an academy that I partnered with, was created by Christopher Terry, a trader of 30 years for institutional trading. As you can see, he created that scanner and he wanted to make it available for the everyday person, not just people with multi-million-dollar accounts. So he's very generous, kind-hearted to make this accessible and affordable for anyone to afford. He and his wife, Isis de la Torre, who's a compliance enforcement officer for the Federal Reserve of New York, believe it or not, they created this company in the United States. They already have 350,000 students over the last 7 years, generating profits alongside of them. And this company is a debt-free company. They're making almost $500 million last year alone. A lot of people are catching on to the craze of learning how to trade profitably. And, a lot of leaders are coming on to help the everyday person win and succeed too. One of those people is Bob Proctor, one of the top 3 success coaches in the world. He's partnered his reputation with this company exclusively to teach mindset on your entire life, not just mindset of trading, which again, remember at the beginning, it was 70% of trading is mindset, 20% is portfolio management, and 10% is analysis. This is going to set you up to win and consistently win by having a mentor. Just like any Olympic athlete has a coach, you need to have someone to help you get top performance, get to your goals faster, less stress, less headaches trying to read books and ask questions or watch conflicting messages on conflicting YouTube channels. Here, you're going to go straight to the point, learn what you need to start making money properly. And here you got 100 mentors in addition to me. Guess how much this would normally cost? Normally, there's an academy that charges tens of thousands of dollars, and they have just one educator, and they let you sit in the classroom for 3 days. There's no holding you by the hand or teaching you for the entire duration of the year. Okay, you don't get apps and scanners included. And like that harmonic scanner that I just showed you, which in itself is worth $5,000, but we don't charge $5,000. We don't charge tens of thousands like other academies. If you want to get started today, it's just a one-time enrollment fee. You need $325 if you want access to all of what the academy has to offer, but you don't even need to do that. Just start with the cryptocurrency pack, and you're going to be able to learn, from just basically paying $235 US one time. Your enrollment fee, you're set up, you're ready to go. You got all the videos, you got all the scanners, you got my mentorship, which single-handedly, I used to charge thousands for teaching people. You got that included for $0 extra. Harmonic scanner included for $0 extra. And there is a monthly fee. However, there's no contract. So this is month to month, and it's the onus on the company to perform and get you results. Perhaps one profitable trade from the harmonic scanner more than covers that every month, like it does for 80% of the students who decide to just stick with paying it every month. But the other 20% of students actually follow through with the scholarship program, where we can get any person that wants it a free monthly membership. They don't even have to pay a single dollar, because there is a 2 and free program. So all we do is we ask this: if you like it, you're learning, you're getting results, you're actually making money with us, we will only ask that you return the favor of introduce and share this wonderful blessing with 2 other individuals that will also be asking you, how the heck are you making that much money? I can't tell you, any kind of income claims or what some of my friends are making, but it's ridiculous amounts of money. Okay. For compliance reasons, I can't even tell you what they're driving. So the point is that you can get it for free every month, access to all those things I listed, including myself, the 100 educators, the scanners, the trade ideas, the notifications sent to your phone when the experts are buying and selling, that you can then copy if you like. You can get that for $0 per month, simply for helping us grow. We're not paying for TV commercials, and you bring 2 students with you to share in this blessing. So if you do that, we welcome you on board, and you can continue learning with us and get access to me as much as you like. You've got my link, robertpaddock.com, to continue getting one-on-one mentorship. And there a few people will actually ask, Robert, what if I get, no, this is optional if you tell more than 2 people. Well, the cool part here is that there's a second income stream you can have. One is from trading. One is residual income, comes in every Friday, no matter what. If you basically help a third person come into the academy, then the company will actually give you a choice. You can continue learning for free, or you can start getting paid $150 US every single month. And that's just the beginning. There is an income reward stream here where you can actually get free money to trade. So I know individuals who are using their hard-earned money to buy crypto and diversify into altcoins and hold for the long term. I want you guys to learn how to trade, make money in both directions for any coin, and not only use your money, but the market's money to trade with, making profits, and also with the company academy's money for rewarding you for helping us grow the academy. If your team, let's say you introduce to just 3 students, that grows to 600 US a month income that you're going to get paid. There's no up to or maybe. That's the guaranteed income. They pay it out every Friday, a portion of that, and every month you got 600 in your pocket. This is sometimes life-changing income compared to how much some people are making. So, 1,000 a month US as 12,000 US per year, you can put into your crypto portfolio on the house, not using your money, and then see what happens with those coins. All you need is the 3 individuals that you introduced to qualify for this. Then you're going to have your team grow on its own to be 30 people. You're qualified to make 12,000 a month. And that's just the first rank. There's a lot more ranks I'm not going to mention, but the numbers get bigger and bigger. I'm planning to roll this out to my Facebook group of 130,000 people next month. Anyone that gets started today, they're going to get not just in a position of being an innovator and early adopter, you're going to benefit from all the future students that I would place under your organization, counting towards your income stream growing on the business side of things. So yes, I'm a trader for 27 years. I couldn't resist the fact that we can get free money to trade with. This is just a logical, no-brainer way to trade less emotionally when you're not trading with your hard-earned money. You're trading with residual income coming simply for helping impact other people's lives to become better traders, because 99% of people are not trading, but they will be soon, because they're starting to catch on, realizing that they're missing out. And, with that being said, my name is Robert Paddock, and you can get this for $235 to start today. I actually have a promo. I have a triple promo for you guys today. Number one, you're not paying $235. You're paying $0 per month if you help us get started with 2 other students. But the initial fee of $235 is actually $199 today. Okay, if you reach out to me, book on robertpaddock.com an appointment with me today for whenever you're free, and I will lock you in and grandfather you in for $199 US to start into this crypto academy. Number 2 promo, There's a 7-day money back, full money back, 100% refund with no questions asked if you don't like the Academy videos. You can go through all the videos you like in 7 days. And then if you're not interested in getting the monthly mentorship from myself and the 100 other educators, you can get all your money back. So there's not much to think about other than if you're even a little bit interested, test it out by trying the actual product, see for yourself that we can try to get you to profit in your first 7 days to see that this thing actually works. There's no contract, no cancellation fee. You can cancel any month. However, we would like to see that what you will do is what most people do. They stay with us for the duration, seeing how much they're making on a daily, weekly, and monthly basis. They're happy to be part of this academy and continue growing alongside one another. So I don't want to take up more of your time. I know it's late on the West Coast, but definitely do not underestimate this opportunity of timing is important in business, just like it is timing is important in trading. I'm here to help you learn trading. The only way to get mentorship from me is to participate with this academy that I partnered with, because I know they have the best tools. I know they have the best strategic videos to teach you. So I'm not going to have to spend thousands of hours with you. It's just going to be straight to the point, getting you results in your first week. So come and test drive it for 7 days. There's nothing to risk, nothing to lose over 7 days. I want to make you the next Rebecca, who just shared with you how she learned. She's now with her entire family trading. None of them work anymore. And they're, past performance is not an indicator of future results. This is not an income claim. But my goal is to make everybody successful who does this, because I'm looking for 100 testimonials. And speaking of 100, I'm going to sweeten the last final deal out of my own pocket. If you get started in this academy, and if you bring 3 students to the academy, I'm going to personally give you $100 into your trading account, whichever broker you're using. This is going to help you to trade, but I want to make sure you're doing it properly, using my money, and you get to keep it. With whether you grow it or lose it, it's up to you. But I want to make sure you have the best chance of growing that into a sizable portfolio, and I will be holding you by the hand every step of the way. So with that being said, I don't want to keep this going much longer. This is your opportunity. What you need to do is reach out to me and set up an appointment with me right now. Go to robertpaddock.com. I'll put that in the chat so you can find it quickly. And don't wait another second. This is a free one-on-one with me, 100% no obligation. It's just to answer your questions, find out more about how you can learn how to be a profitable trader. A lot of students have already joined. Those that are part of the academy made a wonderful decision, and you can book with me also a one-on-one mentorship this week. So whenever you're free, please reach out to me. Again, next week, I'm participating in a trading competition for 6 days, but I'll still be available in the evening. And Ed has put up the links here. So robertpaddock.com, that's how you book with me. Please do that. Every single person on this call right now needs to do that immediately. Whether you're already an active student in the academy or thinking about maybe being a student, please do that right now. Book a time on my phone. I can see a lot of people are already doing so. And I congratulate each and every single one of you. The ones that are brand new, if you're looking to get started right away, let me know. I can't read your mind. This is the opportunity of a lifetime. The next meeting, I'm going to let Ed fill you in on when we have the next meeting and the topic for 1 week from today. So the monthly fee is $0 if you basically share it with a couple other students. Otherwise, it is $175 US per month. And 80% of people are happy paying that because they're making a lot more than that each 30 days from trading. However, I know from experience, Rebecca was an example. She came on board. She says, I never want to tell a single person, she told me. And guess what? She's already now earning $2,000 US per month with 75 students in this academy because she organically told a couple of her friends that her whole family is trading together, not working. She quit her job she hated in a call center. And, she did that within 6 months of joining this academy. So, it's not so much the cost of the monthly fee, it's the cost of missing out and not joining and trying it out when there's a 7-day trial and you have nothing to lose. And my goal will be please book an appointment with me, robertpaddock.com. Then we can try to get you to make money in your first 7 day, okay, during the trial period. That's what I'm here for. I know success is first helping other people become successful. And, that's definitely, it's priceless. You're going to get 10 times your investment, because the number one investment you can do is invest in yourself, in your education. Knowledge is the most valuable commodity. Mindset is the most important in trading. And it's invest for yourself, but not by yourself. So I look forward to working with each and every single one of you. I know a lot of the students that are already on the call, but Ed, if you want to, let's wrap up and just show how we can talk about the next meetings, but don't wait until 1 or 2 weeks to get in touch with me. Tomorrow I'm available. That's your opportunity, because in the future, this will not be available forever.
Thanks, Robert. Thanks for sharing with us. About different technical indicators, and also sharing with us briefly about the academy that you heard of. Just for next steps, we are getting closer to.
I didn't have time to cover even half the indicators we wanted to today.
Yeah,
but I will definitely do it on the next.
We covered today. I think you have like about a dozen or 2 dozen that you work with. So. We are going to continue with the next session, next trading session on the 28th. So here's the poster or the poster for it on the 28th. That's 2 Wednesdays from now. We're having the next session with Robert. And just like how we do our Zoom masterclasses, if you sign up, before the end of the Zoom, it's only $1. If you by midnight, that's when we close the Zoom, it's going to go up. So you can see that you go here, the link, right? I'm just going to post a link in the chat if you didn't get a chance to do it. Right, it's only $1 right here. You can see it's $1, $1 US. It's like $1 Shave Club, $1 invest. And then you go check out. And if it's not showing like a 99 off, just you can change the promo code. So you can see that I'll show you how to do it. You can press remove, and then it'll say that normally it's $100, right? But you type in Zoom and press apply, it drops down to $1 right here, $1.81 with the Eventbrite fees. And then just make sure you type in your name and everything, right? And then once you have that, you can press place order, and that will lock you in for the session in 2 weeks. So and if you want to find out more about Academy, just book the one-on-one with Robert right here, robertpaddock.com. And I think the crypto space is starting to heat up. It's starting to get more excited, and you don't want to be left behind, right? Because we know, as Robert mentioned, in the trading space, it is usually those who are prepared, those who are active, right? As he said, the 1% of 1% who will be making the most in this space. And the exciting thing is anyone can be part of this 1% if you're willing to put in the time to learn, to grow. And it takes time, but we can get there one step at a time, just by watching, going to the academy that Robert is showing, or going to following different YouTubers, or coming out to Zoom gatherings and masterclasses like these. It's just through many of these small gatherings that you can develop yourself. You can become better at crypto trading. You can understand charts patterns and can become a better crypto investor. So I think that's about everything we have. I'm going to open up the room. I'll stop the